to take a look at some of the fundamentals, which I think are coming back onto the front burner right now with the Nigerian market, particularly politics and, of course, oil and activities in the Niger Delta. We're beginning to hear of attacks coming from that area. I mean, are you getting worried about that?
I think it's worrying. I mean, we've had generally about a year of peace, relative peace in the area. And with elections coming up, with tension increasing, and reports of new attacks and kidnappings, it is worrying for investors.
Indeed, I think so. And I think another issue, obviously, which some have raised is the budget. We have not seen the appropriation bill for 2011 sent to the National Assembly just yet. And obviously, with the history we know about how budget gets passed in Nigeria, this probably means that we probably won't see this budget passed till sometime in the maybe second quarter of next year.
It's not a good sign. Generally, budgets have been quite heated discussions between the National Assembly and the President. We haven't heard any word of any budget document being prepared. And if you look at some of the big bills still in front of National Assembly, such as PIB, potential amendments to the Electoral Act, and with the budget coming along, there are a lot of big bills that are stacking up to the end of the year.
It seems like the budget is obviously on the back burner right now with elections and, of course, that petroleum industry bill which you just mentioned. Let's come back to the markets now and talk about results which we saw last week. Oando released its Q3 numbers last week. Some analysts are saying it was below expectations. How did you read that result?
I think a lot of analysts were expecting, because of the H1 results where the PAT grew by some 7%, they're expecting similar growth throughout the year. But I think what analysts have to bear in mind is that those growth in H1 was due to government paying up a lot of the debt they owed through the Petroleum Subsidy Fund. I think this Q3 results is up 26% PAT. Revenues are up 8%, which is a larger growth rate than in the H1. So it's good in that sense. But I think Oando, in all, it seems to be restructuring his balance sheet, especially the debt, and that's good.
I mean, some analysts always point to the higher margins in Oando's business, more so because they invested in the gas business and some other upstream areas. But what's your outlook for that sector in general? We've obviously heard of news about the regulation of the sector, and the Minister of Finance has mentioned in the past that come January they should deregulate. Going into an election year, I think it's going to be difficult to execute that.
Yes, I think it will be. I think if you look at the petroleum marketing sector in terms of downstream, the sector is normally a large volume business with very thin margins. I think the likes of Oando are voting with their feet. They're trying to divest from the petroleum marketing and diversify more into the upstream and midstream operations, which you see as more lucrative, bigger margins. Now, the issue a lot of these petroleum marketing firms are going to have is that as some of them seek to diversify, they're going to have debt problems. And the issue is that, for example, Oando had that issue in the last 1 or 2 years where they were trying to fund the acquisition of upstream assets and rigs with short-term debt, such as CPs and 1 or 2 year debt instruments, which doesn't really work. Now they're going through the process where through the MTN program, which they announced earlier this year, and potential rights issue, where they're trying to change their balance sheet so that it's more into medium to longer term borrowing. So some of those assets, they take longer to bring on stream, and your balance sheet matches that. I think the success in doing that regard the success of the company. So,
I mean, on that note, what's your take on Oando? Looking at where it's trading right now, it's one stock that most analysts tend to point to in that sector.
I think if they continue to move basically, if they can get that debt more longer term to suit the upstream assets, because exploration in the upstream world is more longer term than the marketing, where they could do CPs and would basically just wait for delay of payment from the federal government. But as they move towards that, they can continue to restructure their balance sheet. There's a rumor of a potential GDR coming on board in the next few months. If they can do all that successfully, I think they're on the way to become a very good company.